Okay, welcome back for another session. Today we're going to be tackling market structure. Um, yeah, I don't know what happened right there, but yeah, let me just leave that. Yeah, today we're going to be tackling market structure, and I think if you've been obviously going through the course, you probably have seen me explain a little bit or spoken about a little bit of what market structure is. Yeah, um, the market, like I keep saying, is got no. The market doesn't care about your feelings or how you want the market to go. We as day traders don't have a say as to how the market will move. But what we can do is to identify what the market is doing and then position ourselves to be able to take advantage, quote unquote, of what the market is or what's going on in the market. I'll say that again. We as day traders don't have a say of how the market moves, right? But what we can do is to put ourselves in a position to be able to get something out of the market. So we don't come into the market with already like we don't come into the market thinking today is going to be a buyout, tomorrow is going to be a sell. No, we look at the structure and then we determine what the market is saying, and then we put ourselves in that situation to make something out of it. So I keep saying, do not come with an expectation if you've not done your analysis, right? Do your analysis. Let the market tells you what it wants to do. That way, you know that you're doing what the market wants to do and not trying to force the market to do anything. So, what is market structure? Market structure simply refers to the framework of how the price moves, right? So when you identify the support and resistance, when you identify where the buyers are, where the sellers are, when you identify your swing highs, your swing lows, that is what market structure is, right? So remember, in the first video that we ever did, I said that the market doesn't go all the way like that. There's no way you get into the market and just keep going up, keep going up, keep going up, or it comes all the way down without moving sideways, right? That's not what the market does. The market moves in waves, right? It moves in waves. So if it's trying to be a bullish trend, this is how the market is going to go, right? It's going to be a lot of higher highs and higher lows being formed to indicate that the market is trying to move all the way up, right? When the market wants to move down, what does it do? It moves in a way where it forms lower highs and lower lows. Lower highs and lower lows being formed is an indication of the market being bearish, right? So let's make this one red so this is an indication of the market trying to go up because there's higher highs and higher lows being formed. Yeah, and obviously, when it comes to the market being bearish, that's lower lows and lower highs being formed, right? And I keep telling you that there's also the consolidation market, right? Consolidation market is when the market doesn't really break a swing high or swing low, or even if it breaks, it doesn't clearly give you the direction of what it wants to do, right? So this is a consolidation market. It means that the market really doesn't know what to do. So this is what forms the market structure, right? So let's say that I put this here, I put this over there, I move the consolidation market here, then let's copy this as well. I bring this there, and then I bring this. Let's go and grab this green candle. I bring this green over there. You can tell that the market is made up of what? It went high, then it came low, then it consolidated a little bit, then it went high, then now it's trying to build some bullish structure. So what is market structure? It's the framework of how price moves, right? It goes up, then it comes down, then it consolidates, then it goes up, then it comes down, then it consolidates, then it goes up, then it comes down, and it consolidates. That's what you need to understand. So when I'm telling you that I don't come into the market thinking that today I'm going to buy or today I'm going to sell, I want to come into the market and see that okay, the market when I open the market and I see this in front of me, right? I know that at some point the market was moving up, right? And it got to a point, it began to move down. And then it started to consolidate at this level, right? It started to consolidate at this level. Then it broke structure to the downside. And then when it got to this point, what happened? It started going up again. So if I come into the market, I'm looking at what the market is doing and I'm saying, okay, if this part decided to break and go up, what am I trying to look for? I'm trying to look for an opportunity to get some buys because I'm seeing that there has been a change of character. Meaning, anytime, remember what I said to you, anytime higher highs and higher lows are being formed, that is an indication that it wants to go, it wants to be bullish, right? In this particular example, the market was all the way up because higher highs were being broken, right? Swing highs were being broken, right? Let's use another tool. Let's use the trend line. Swing highs were being broken. We saw swing highs being broken. That's an indication that the market wants to go up, right? But then when it got to this place, what happened? Swing lows started being broken. So then the market began to go up. And then we got to this level. When we got to this level, the market didn't know what to do, right? So remember what I said to you, that anytime you get into the consolidation zone, you have no trade. Don't try and trade a consolidation zone. I mean, some people do trade it, but I'll tell you, don't trade it because you do not know what is going to happen right now. Do you understand? This is a consolidation. Why would you want to trade consolidation? The market is not telling you anything it wants to do right now. So why do you want to trade? There's a no trade zone. Is a no trade zone. Don't trade this zone. Don't trade this zone. I know some people can trade it, but if you're new to trading and you're not that experienced, I would not advise you to trade a consolidation zone. I would want you to wait. And then when you wait, what you're going to see, that structure is going to be broken to the downside at this level, right? So when it breaks the structure, now you know that a swing low has been broken, right? Remember what I said, anytime a swing low is broken, an indication, it tells you what it wants to do. It corrects itself and it begins to what? Continue, right? Forming the lower trend. And then when you get to this level as well, what you can see as well is that this is the low that was formed. This is the swing low, right? That's the last low that was formed. And then the swing low came from what? This high, right? So that was the high that was made, right? But we can tell that at this level, that high was broken, right? This high was broken. This high was broken. So anytime a high is broken, it indicates to you what it wants to do, right? So indication, it corrects itself, and then it continues on the upward trend. So yeah, what is market structure? Like I said, it's just a simple way of telling you how the market moves, the framework to show you the price movement, how identifying swing highs and swing lows, how the support and resistance. You have to know that, okay, when the market gets to this level, it knows, you know that there are sellers at this level. So what they are selling, if it gets to this level, you know that there are buyers at this level. Let me move this one to the top. If it gets to this level, you know there are buyers at this level. So anytime the sellers sold, it came to this place, buyers were strong, so they took it up until it gets to this place where it gets broken, right? So that is what market structure is all about. Now, I'm going to go into a little bit because market structure can be it's not confusing, but sometimes people will get confused as to what market structure is, right? Okay, so let me give you an example. So what you're going to do is, actually, let me just draw some lines, right? Let me just draw some lines. Now, in this particular drawing that I've made, what are you going to say the direction of the market is? I'll give you 1 second for you to think about it. Remember what I said, anytime higher highs and higher lows are being formed is an indication of a bullish trend. Anytime lower lows and lower highs are being formed is an indication of what? A downward trend. If they are caught up in between two highs and lows, that's a no trade zone. So in something like this, what are you going to say is the trend? Okay, let's go through it now. So this was the high, this was the lowest point, right? And then this low point formed this high. So this is a high as well, right? And this high formed this low, right? So this low also formed this high. So anytime you want to trace where the high came from, you trace backwards to know, okay, this high was made by this low, right? But then remember that this high has been broken. So anytime it's being broken, it broke to the upside, right? So this market was in between this level until it got broken. So it broke that level, right, to indicate to us the market wants to go up. And then when it broke to us, what happened? It created a new high. This new high came from this low. So anything in between this high and this low should tell you that the market is bullish. Remember what I said, anything between this high and this low should tell you that the market is bullish, right? So what happened? It broke that high, created a new high. This high is also going to be broken right now. So if this high breaks, right, it forms a new high. Where did this high come from? This high came from this level, right? So let's draw our lines here and say, okay, this is the new high. This high came from this low. So now anything in between these two, it doesn't matter how long it stays in this for, it's still a high. So on the higher time frame, like a 4-hour time frame, you're going to see a big candle, right, formed, or a few candles formed, right? And then what you're going to see that anything in between this, like I'm saying, because it hasn't broken either the high or the low. So let's assume this is here, right? And let's assume this is here as well. It means that at this level, from that level all the way to this level, anything in between these two lines is an indication that the market is still bullish, because the low has not been broken and the high has not been broken yet until at this point, right? So on a higher time frame, you're going to see something like this, but on a lower time frame, you're going to see a lot of structure being formed, right? You're going to see a lot of structures being formed. So the external ones also have internal ones formed in between them. Do you understand? So it means that if you go into the big structure, within it, you're going to see structures being formed in it. Does that make sense? So like I'm saying, this high, before I think this one was there, and then that was there as well. So at this level, what happened was that this low was broken, right? This low was broken. And when the low was broken, it means that a new low was formed right now, right? But where did this low come from? This low came all the way from that point, meaning that anything in between this and this is a bearish indication. It means anything in between the two lines is bearish. Why is it bearish? Because this low has been broken. Okay, now when it got to this level, it went all the way up there to break that high. It broke that high. When it breaks this high, this forms a new high. A new high is being formed. And where did this high come from? This low created that high, right? So if this low created this high, it means that this is still bullish, right? Because now is an indication that this market is going up, because a higher high has been formed from this one. Is a lower low, but then it's a lower low that created a higher high. Does it make sense? All right, cool. So let's try again. This high, it went all the way and it broke it, right? That's the indication being formed. Indication being formed, and it created a new high. Where did this high come from? This high was created by this low. So anything in between this high and low is a what? Is a bullish. It tells you anything in between this and this is bullish. So when somebody sees the market like this, you're gonna say, okay, we're in a bullish trend. It doesn't matter how it looks. Now let's go to this point, right? So another high was formed here, because this high is greater than this high. So a new high was formed at this level, right? And that high came from this low, right? Because that high came from this low, everything in between that is bullish. A new high was formed over there, and that high, this high came from this low. Anytime you want to find out where the high or low came from, you just have to trace it backwards. That high was formed from that low. So it means that anything between this and that is a what? Is an indication that the market is bullish, because that high was broken. But guess what? What happened when we got to this level? That low was broken. So it means that we have a new low. So this is our new low now. Now, where did this low come from? This low was formed from this high, meaning that anything in between this market is what is bearish. Do you understand? So you're not going to look at this and tell me that, oh, this is a trending, is trending upwards. It's not trending upwards, because the last break that happened was the low being broken, but then the low has not been broken yet. The high has not been broken yet. And because that low is broken, anything in between them tells you that the market is trying to move bearish now. It's very simple. It's very easy to understand. That's how the market moves. If you get to understand what I just explained to you right now, then you are not going to be confused with the structure of the market. Let's go into a real market and show you an example, because sometimes what happens is that people get confused. So let's use this as an example. So at this level, right, we're seeing the low was formed here, created the high, created a low, created a high, went there, then went there, then went there, then went there, then went there, and there, then there, then there. This is quite easy to know that obviously it's trending upwards, right? I'm going to show you something. Went there, went there, went there, went there, then something is being formed right now. So if you want to really get this, you can take it out now, and then let's see, like we did with the other one. where was our low? This was our low, the low that was formed here, right? That low was formed here, and then there's another high that was made here, right? This is the high from that level. That was the high, right? And then what happened? This high, everything in between here and here is a no trade zone, but it tells you that it's trying to move up, right? But then this high broke, right, indicated, and it went all the way up there. And then when it went up there, what formed that high? This low, right? So this is the new low, and that's the new high. And this high is broken, so that becomes the new low. Where did it come from? It came from, oh, sorry. Where did it come from? You trace it backwards. It came from this low, so that becomes our new low, right? So it means that anything in between it is bullish. And then what happened? That high was broken again. So a new high was formed there. Where did it come from? It came from this low. So what, you put it over there, and it keeps breaking until that point when that point is what the high was broken, right? And a new low was formed here. But when it got to this level, what happened? That low was broken now, right? That low was broken now. So a new low was formed. This is the new low being formed. But where did this low come from? This low came all the way from that. So it means that anything in between that is a what? Is a bearish trend until at this point when that high is broken. So that even though the high didn't break it too big, it's still what? It's still bullish. So now we're in a bullish trend now. And then what happens that this is where that high came from, right? And then you can tell that that high hasn't been broken yet, but the low where that high was made from has been broken. So this becomes a low, right? And then remember, because this is a low, where did this low come from? This low came from that high. So you're going to look at something like this and say, oh, that's a bullish trend. It looks like it's going up, but then the market structure tells you that at this particular point, the market is trying to go low because the last low has been broken, and that high, the low that was broken created a new lower low, and then that lower low came from this higher high, but that higher high has not been broken yet, right? So the market has indicated to us that it wants to go down. So that's what market structure is all about. I don't want to overcomplicate this. I know I'll probably do another video explaining I'll probably make a part 2 of this video, but for now, I want to keep it very simple. Watch this video several times if you don't understand. Get into the Discord, ask me questions, and I'll try and answer that question. But yeah, that is the basis of what market structure is. You need to understand where swing highs and swing lows are being broken, how the price is being moved. And if you're able to trace where the highs and the lows are and how they got broken, then you know that anything in between a low and a high, depending on how it was broken, will tell you what the structure or what the market is in right now. So yeah, this will be the only short. It's a very short, quick video. Watch it a few times to understand it, and then I'm going to make another video to explain it a little bit detailed. So yeah, I'll see you on that video. I'll talk about how to mark up the chart and obviously market structure. So yeah, watch out for that video as well. I hope you enjoyed this video. Yeah, send it to the people that are getting into trading now. These are things that are very easy to understand. So yeah, I'll see you in the next one. Thank you.